The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have Samuel Archibald Arrington Hicks Crawford as our guest at the break from Crawford Perspectives, and we'll be talking to him about the market. We had some, I think, some pretty exciting things happen yesterday, but the main thing is that first chart that I posted in here is a chart over the last 2 weeks of JP Morgan, and it shows the butterfly pattern that formed yesterday. If there were ever an award for the greatest CEO in the history of business, I think that award should go to Jamie Dimon. He has to be the best there is. Any firm that can pay $16 billion in fines and not go to jail, they deserve an Oscar upon Oscar. That still surprises me that stuff like that goes on. But like they say, money talks and BS walks. So we'll see about what's happening, what's going on, and we'll go from that level here. Now, there is a chart that we should all pay very close attention to, in my opinion. And we'll see. We'll get some feedback from our good friend Steve Rhodes, because he specializes in candlestick patterns. But if we take a look here, what happened yesterday in the long bond, the 30-year bond, over the past 10 months, you'll notice that we had a situation where we've had these shooting star patterns. We had one in August, and the market broke from 163 down to 150, and we had another one yesterday, right at a 1.618 expansion. So that should mean something, I would think. We'll have to wait and see. There was a lot of emotionalism going on in the market, and I believe if we get a good rally in the stocks, which I think that's coming, then I would think that this would probably be the reason behind it. I don't think the reason is crude oil, but there's some reasons why crude oil should be bottoming also. But the bonds are the ones that really show the clearest patterns that something really big is happening. Now, yesterday, when we had this big move down in the Dow Jones, down 400 points, at that time, the Dow Jones, if you looked at it over a 10-day period, you'd be noticing that 30-minute chart on the Dow Jones E-mini shows a perfect ABCD measuring down to 15,490, and the low was 15,465, and of course it's had a pretty good rally. That suggests that we have another ABCD pattern forming now that should give us some resistance up here at 15,886. However, that's going to put the Dow up well over 300 and some points today, which is certainly, let me see, that would be up about almost 300 points, which means it would take back everything that it lost yesterday. If it does that, then we've got a little bit of chance of moving. But I think that the possibility of the rally coming in the stocks will be related to the interest rate scenario of what we're looking at in the bonds and also in the notes. I don't think crude oil has a whole lot to do with it, but that's what everybody's telling us on CNBC, so they must be right. That's the only way you can figure that one. Now, I'm just going to try, because we have Arch on today and my time is limited, I'm just going to try to highlight what I think is the more important things that have happened overnight. And one of them, of course, is in the Japanese stock market. It got really hammered this last few days, as you can see. We made a 382 retracement here back on February the 1st. And then in a matter of 10 days, you can see what's happened. That 382 retracement came off of the November high. which was also a very important number from going back several more months. But the 382 retracement after that move told us that it had a possibility of a pretty significant down, and we've now made the 1.27 expansion. We've actually gone below it a little bit, which tells us that we could easily drop another 10%. I don't think we're going to drop 10% from here. The reason why is the fact that the overall structure of the market in stocks doesn't look nearly that bad as it did, back on on January 20th. We've taken out that lows by a little bit, only in some of the indices, like the Russell has broken below it. The banking index, of course, has broken below it. And we're in a very, 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 very bearish market, folks. And what you want to watch for is watch for some type of a rally here. It could be 3 days like we had from January 20th into the 26th, or it could be those are trading days I'm talking about, or it could be as much as 2 or 3 weeks. But it's going to be a very, very very weak rally. There's nothing else you can do about it. Okay, we've got a caller from our good friend from Martinez, California. Brent, are you there?
I am, Larry. Good morning to you. How are you?
Good morning to you. What can I do for you?
I was just calling. I don't get the opportunities that I used to have to call you and talk to you, just because I have my train ride I do every day. I happen to be off today, so I wanted to give you a call and just thank you for all the great information you provide, all the great guests you've had on lately. It's really been a pleasure. It makes my train ride much more pleasurable having you to listen to.
Well, I'm glad someone likes it.
Oh, it's great. It really is.
How's your rain situation over there? You still getting some rain?
It started out great. It's been actually a good year. I know the snowpack is above average and rainfall is above average, but we're having a little lull here for the last week or so. Has been. I mean, it's okay because it's nice to have things dry out a bit, but we definitely need to keep it going because we don't want it to stop. But it's so far so good, yeah. It's been good.
Did you have a question about a market today?
I just wanted to thank you for what you do every day and just keep it up. I'm sure it's not the easiest thing, to fill up an hour every day with information, but you do a great job of it. Just keep it up, and looking forward to hearing Archon, and you have a great weekend, have a great day, and hopefully I can talk to you soon, okay?
And I'll send you that $50 check just as soon as my horse comes in the 5th race at Santa Anita today.
All right. Take care, Larry.
All right. Okay, buddy. Thanks a lot, Brent. I appreciate the call.
All right, bye.
Okay. Yes, we will have Arch Crawford on at the break. He'll be coming on pretty soon. Anyway, we did cover the Nikkei. You can see where it's broken down. We've had the same thing happen in the Chinese market has broken down. However, if we look at what's happening with the rest of the market, we know that the Dow made that big ABCD yesterday, right on target. And if we were watching the E-mini S&P, we had a very interesting pattern because the high that we made on the previous day on the 10th was a beautiful ABCD Gartley pattern up at that 1874 level. We went down and made a 127, and you'll notice that, well, take a break here. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back. This is Billy Ray Valentine from the offices of Duke & Duke at 100 South Broad Street in Philadelphia, Pennsylvania. And it's time to fish or cut bait, folks. Take a look at the chart that I just posted into Tiger TV here, and you'll see heating oil, daily chart, going back a year. Recently, over the last 2.5 weeks, almost a month, we have pulled back to a 61% retracement 3 days ago, just like we have done in the oil, only oil made a new low by 2 ticks. Can you believe that? One of the largest traded things in the exchanges. It only makes a low by 2 ticks. It rallies $2 a barrel. Gasoline also made new lows and has rallied a little bit. But the key one here, I believe, is the heating oil, because it's had such a perfect run and couldn't even back off more than a 61% retracement when gasoline and crude oil were making new lows. That's a sign of divergence coming. And so I think that's a pretty good chance here to see the market have a little bit of rally. Now, I know if it rallies, they're going to say, oh, this is causing the stock market rally, and judge is ruling. Not so. I believe that the interest rate scenario, the risk on, risk off scenario, will be the thing that makes the market rally. And it is a bear market rally, folks. You can look. This S&P made a lowest low in 2 years the other day, yesterday. So that's a very, very bad sign if you want to be able to look at it. So we'll see what we have going on right now. We got a caller from California. Paul, are you there?
Yes, Larry. Good morning. How you doing?
Good. I think I missed you yesterday, didn't I?
Yeah, I don't know what happened.
Yeah.
You know these stuff,
internet. I had an internet problem. My internet went out, and by the time I got back on again, you had already left, so that was my fault. What can I do for you?
You know what? I'm still totally amazed with Norm's prediction on the Super Bowl.
Mm-hmm.
the way he broke that down. I took everyone's bets on Denver, by the way. So thank you, Norm, if you're listening.
Yeah, he did a great job, that's for sure. Sometimes astrology works and sometimes it doesn't, just like everything else, but that time was pretty much spot on.
Yeah, he's been pretty spot on your show, actually. Hey, I had a question
He's
about
very good.
Art.
You darn right he is. Go ahead, Paul.
Yeah, he's very good. I love listening to him, and your guests that you have on are very informative, and the show is doing great. I really appreciate the show.
Well, thank you.
With Arch, and I heard an interview with him in 2000, maybe it was last year, but it was in regards to the downturn in 2007. And if I remember correctly, he said that he had shorted the market with around $10,000 and ended up making several times more than that. You know, I don't remember the exact numbers, but it might have been $200,000 that he took out of the market. Mm-hmm. I was just wondering today, when you talked to him, if you could ask him what his strategy was in 2007 and kind of how he shorted the market back then.
Sure.
And that was my question.
Sure. Well, I'm usually in pretty good close contact with Arch quite a bit because he lives right down the street from me. So and he's very open to talk about what he does and stuff, both good and bad. So I know he's done well recently because he's been very bullish the gold, and of course gold's had a $180 rally off the bottom. So that's a big move in 7 weeks. So that makes it pretty good.
Great. Well, I appreciate that. If you could ask him that, Larry, and the newsletter is awesome. Some of those trades we've done recently in the newsletter paid for my whole subscription for the year, so thank you for that.
Well, I'm going to have to send you $50 too. Thanks a lot, Paul. I appreciate it. Just remember, when the Brad trades come in, don't throw fruit at me, okay?
Oh, you got it, buddy. Have a good one. Have a great weekend.
All right. Thank you. Okay. All right. The next one we want to talk about here is, I'm going to have to start having these people. What I do is I call 6 people a day, and I say, please call in and say something nice about me. And if you do, I'll send you $50. Well, sometimes they get through, and sometimes they don't. You just never know. Okay, let's just talk here about one. Here's a free one for you, folks. This is the one that if you like the interest rates, you want to short bonds, and you don't want to risk very much. Take a look at this one right here. This is the Dow Jones Utilities, going back a little over 18 months, and it's been in a bear market for quite some time. We had a higher bottom in December, when we started down in the S&P and stuff. But look at the 3 numbers that came together up here this week. We had a 78% retracement, and that was spot on to the tick from the January of 2015 high. We had a 1.27 expansion from the August high, and we had a 1.41 expansion from the October high. 1.41, of course, is a square root of 2. Now, if you just take all those together, that tells you that this index is getting ready to have a pretty good correction. And as you can see, it corrects well over 15% when it's had these big corrections. And this is a downtrend. And this 786 is a perfect Gartley. We have a perfect A, B, C, D structure there that makes it absolutely, spot on. So find yourself Con Edison or something like that, and we'll see what we can get. Oh, this is my lucky day today. Here goes another $50 out the window. We got Priceline Charlie from La Paz, Mexico. Hi, Charlie.
Good morning, Larry. How are you?
I am above ground, staying away from open graves, my friend.
I will tell you, since you are on the trend of good news, everybody heard it. I called the other day, and you said, don't worry, the safe is going to fall, going to crack open and get the money. Hang in there, wait. And I waited, and you made a perfect call.
Well, that was the one this year. Thank God we got one in the first 8 weeks. How's everything going down in Mexico? The business still holding up okay?
Yes, I actually got into the solar business with a friend of mine here, and we made our first sale yesterday. We finished and we closed the deal, 107,000. I said 107,000 pesos, only $9,000. Not a lot of money. Sounds a lot. But
it sounds a lot for sure.
Yeah, I'm helping a friend and get into and I'm actually going to be a partner in the company. We're going to sell solar systems in Mexico. The sun's
Wow.
shining, and yes. And we're using very high-quality solar panels and high-quality inverters instead of using the cheap Chinese that everybody likes to use here. And we went against price because the people said, look, their price is lower than yours. We said, but look at the quality.
Wow.
We sold our first solar system, and frankly, we have several more people who are interested. But my belief is put one in, make sure everything works perfect, and then the next one will come. And we'll do the next one and the next one, and it's a great business here. The sun shines here all year long, just about.
Well, that's like Tucson, because I'm only 72 miles from the Mexican border too. So, but you're quite a farther south, and you're another 1,500 miles south. People don't realize how big Mexico really is, because it's a huge country.
It's a huge, and really, I think it's a great country. It's a great neighbor of the United States. We're lucky.
We are indeed, and also on the Canadian side too. We're lucky.
Yes, we are.
Oh, we got to take a break here, Charlie. Can you stay with us for a second?
I will do.
Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got our good friend Arch Crawford of Crawford Perspectives on the line. Arch, are you there?
Yes, I am.
Hey, Arch, I wanted to congratulate you again for making it into the Timer Digest. You've always been up in the top there, so I think it's great. We have one question already, and that is your view on gold. You've been really bullish gold recently, but the question that the person had was several years ago, back in 2007 or 2008, you made a big call in gold where you had bought some puts or something, and you made several $100,000. Do you remember that trade, Sam?
Not in gold. I made $500,000 on the drop in '08 with just ordinary S&P options.
Wow, that's how many do you have to do? About 20 of those to make that kind of money?
I did about $2,500 worth.
To make $500,000?
That was '08.
Whoa. How do I subscribe to your letter, Sam? I already get it. So that's absolutely fabulous. Anyway, listen, I've posted the chart of that Wilshire 5000 index that you sent on to me, and did you want to discuss that?
Yeah, the primary thing about the Wilshire is it's the broadest index that's fairly popular, and the other one is the New York Composite. And the New York Composite and the Wilshire have broken levels that the Dow Jones and the S&P have not. So I think it's a more accurate description of the collapse that we're progressing within. On the gold, I have stayed out of it all the way down. I made a couple of trades in the newsletter that lost small amounts of money in the last 5 years, and otherwise I've stayed out of it. And I've at the most recent ones that we have never hit a higher high, intermediate high, all the way down, nor have we broken the 3-year downtrend channel line. So I said, if we are able to break through the 200-day moving average and the downtrend channel line, this could be it. And it broke through there, and it screamed. So I'm delighted.
I have a question, Sam. One of the listeners would like to ask your opinion on whether we are in a major bear market here in stocks, or is this just a correction like we had in 2011?
I believe it'll be worse than '08.
Wow.
Well, this is, in 1962, when I called the crash, I was alone. When I predicted a top day and crash in '87, I was alone. In 2001, I predicted 9/11. I said the U.S. will be at war that week, and I was alone. Now, this time, a lot of big-name people who are in the background but who are often bearish are much more into the economics and are spouting that information than I've ever seen before. That people are very aware of what's going on, and it is far more dangerous than you'll find in the popular press.
What do you think the effects of quantitative easing will be in a long-term pullback, or a long-term, over what's happening in the market? I mean, my feeling, I just think it's baloney. But what's your opinion on quantitative easing, Arch? You've got a lot of experience in this area.
Well, I believe that quantitative easing, they used to call that running the printing presses, and they blew up the money supply to huge numbers. That is the cause of everybody having extra money and rushing around to find a place to put it, and they could only put it in the stock market and a couple of other places. So they blew the bubble up with the QE and all of that other kind of thing, and the reaction now is natural reaction to the bubble being blown up so big.
Okay, Arch, I have a question. When you were in New York in the early 70s, that was the 1970s, right? It wasn't the 1870s. Arch was actually born on the same day as J.P. Morgan. Arch, did you ever know George Lindsay from, the Three Peaks and the Domed House fellow? He was pretty popular around the same time you were just getting started, wasn't he?
Oh, I was over his apartment once. He showed me a lot of his personal work.
Wow. What can you tell us about him?
He used to go to the cycle meetings in New York fairly regularly.
Wow. What kind of fellow was he? Well, no, let's...
He was a brilliant researcher, and he did some wonderful technical work. He was a very funny man.
Mm-hmm. Then he moved to California in the 80s, and of course, Arch. One thing I did know about him, and that is, he died on the top day in the stock market in 1987, August 25th.
I didn't realize that.
Yeah, we had that harmonic convergence. Yeah.
The high close was the 24th, which is where I had predicted the high would be.
Uh-huh.
3 weeks ahead of time.
I remember we were on CNBC. Well, it was FNN at the time. We were on with Bill Griffith. Do you remember that down in California? He and Ron Insana and Sue Herrera. We were on the same show together at that time, and it's a long time ago, of course. Now, Sam, I wanted to ask you one other question about when you first started doing this. You worked with one of the major guys at Merrill Lynch, wasn't it? Bob Merrill? Isn't that who you worked with?
Yes, I was his first ever assistant.
Wow.
In 61,
you've been doing. Well, we're the same age, so you've been doing it a little bit longer than me. So I'll tell you, folks, Arch lives not too far away from me, and the guy really understands, the astrology part of this. Sam, what do you think will be the scenario? We've had some type of a possible minor bottom in here, but do you think we'll get much of a counter trend rally from this level, or do you just think it'll be more like a dead cat bounce?
I think it'll be a dead cat bounce. Mm-hmm. We're in the field of the. I mean, yesterday, last Friday, the market really seemed to lose control and started just looking really horrible. That people were just dumping things, and it happened again yesterday as we broke some important technical levels, and then. I believe that the central banks came in and saved it in the afternoon. They made some announcement about Japan or a couple of other things, and way up.
Okay. Sam, stay with us. We got to pay a few bills, and then we'll be right back, okay?
Okay.
Thank you.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back with Arch Crawford of Crawford Perspectives, and we've got a couple of questions. Arch, is Bob Farrell still alive?
Yes, and he has still puts out a little bit of a private service. I don't know if he's charging for it or if he just sends it out to a few friends, but as far as I know, he's still active, yes.
You know, would you know what the website would be or anything offhand?
Well, you could probably Google Robert Farrell.
Yeah, he's been around for so long. Didn't Prechter work for Bob Farrell for a while also?
Yeah, about 10 years after I did.
Okay. Well, that's very interesting. Now, Sam, the reason why I call him Sam, folks, is because he's got about 12 names in his Samuel, Archibald, Arrington, Hicks, Crawford. Is that correct?
Samuel is not actually part of it. My name is Archibald Arrington Hicks Crawford, and I was living with my cousin in Chicago, Archibald Arrington Hicks, and I took Sam.
Well, we're looking at the U.S. dollar index hourly chart now. Did you want to tell us what you're seeing here?
Yes, if you see to the far left of the chart, there's a big down day, and I wrote a thing up about it and put it on LinkedIn as well as other places about it was almost a 3% drop, and that was very unusual for the dollar against major currencies. And the one last Thursday, a week ago, was actually bigger than that one, and I wrote it up again as being symptomatic of very serious problems out there somewhere because of the volatility in all of the things that are going on. There's the volatility in the oil and all of the oil things, and then there's the interest rate things that have just been wildly swinging lately, and then there's the interest rate on the low quality bonds has been extreme on the upside in the interest rate. And anything that there's any doubt about right now is being moved to a much more costly phase.
I can certainly see.
Just had this other second one that was even bigger. I think it was like Thursday a week ago, and the volatility is extreme, and even in supposedly the most stable things in the world.
That makes pretty good sense. We had one other question, Arch, from one of our callers, and that is you're expecting a dead cat bounce, and he knows that you deal a lot with the E-mini S&P. What would you be looking for as a possibility of this rally if we do get it in the S&P. We're trading around 1840 right now. How high do you think we could get?
I think we may have seen it.
Well, you don't have to be so quick. No, really, just that's all it was yesterday with that little 30-point rally. You think that's all we're going to get?
Yes.
Well, you really are bearish. Well, at least we know that for a fact.
Well, I could possibly give it 2 or 3 days, but I'm looking for the 19th and the 22nd to be a plus or minus a couple of days to be the worst period. And the 19th, there's the sun is at the midpoint of the what is it? It's Uranus and Pluto. The sun is at the midpoint. It says urge for independence and freedom, strong emotional tensions, nerves, a breakdown, a catastrophe. That's what it says right out of the book, and I put it in the back of my last letter. And then the 22nd Monday is a full moon. So I would say that the sentiments will maximize within a couple of days before Friday or a couple of days after Monday.
That makes perfect sense because this market certainly bounces like a dead cat for no reason at all.
When you get in markets that are highly emotional, the new moons and full moons become far more statistically important.
Say that again, please.
When the market becomes highly emotional, more than normal, extreme, the new moon and full moon periods become far more important statistically. It'll be the biggest up days, the biggest down days, and the most important turning points.
Wow, that's an interesting thought. I never figured. I always liked the full moons and new moons, but I never thought to equate it to increased volatility. That certainly makes common sense, doesn't it?
Well, if you run the statistics on the new moon, full moon periods, it is highly significant, but in a very, very minor way. Small percentage changes. But when you get the swinging wildly in the market, in whatever market it's doing, I mean, you can measure it in the oil, or you can measure it in the gold, or you can measure it in whatever market becomes highly emotional, that these things will be the biggest up days, down days, and turning days, the new moon and the full moon, and sometimes the quarter moon.
Wow, that's really amazing. Now, if the folks want to reach you, Sam, what's the best way for them to contact you? Tell them what your website and what your email is, please.
The website is www.crawfordperspectives.com, and that's a lot of letters. If you want to just find it, you can Google Arch Crawford in quotation marks. And the office number is 520-577-1158. And you can email crawfordperspectives@earthlink.net, or have a new one called Crawford P-E-R, Crawford and then P-E-R @gmail.com.
Okay, that's really good. Well, we want to thank you for having you on today, and I'm certainly going to be watching that new moon coming in on between the 19th and 22nd of February. That's going to be interesting.
Full moon.
Full moon, because we just had the new moon with the beautiful star formations. The 5 planets in the night sky was really, or in the morning sky was really fabulous. I wanted to thank you for telling me about that, because I went out and looked at it, and it was, even with my binoculars, I could see how spectacular it was.
Definitely.
Yeah. Well, listen, thanks for joining us, Sam, and we'll have you back on soon, okay?
Very good, sir.
All right, we'll talk to you soon. That was Arch Crawford of Crawford's Perspectives giving us his ideas. He comes up with a date of week from today, February 19th, and then also Monday when we have the full moon on the 22nd. So we'll want to be watching those. What's interesting is, folks, that's spot on with what Shane Smolian has been talking about for quite some time with his planetary speed index. It comes into that same area, so we'll be watching it, very, very closely, and we'll see what happens, with that date as we come up. Of course, that's a week away, so a lot of things can happen in a week, and given the markets the way they're jittery, we could be, 5-10% on either side of this without any trouble at all. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I've posted the chart from our good friend Jim Bartolioni, the New York Stock Exchange Index going back the last 15 years. And notice the similarities of the price swings that we've had in there. You'll see that they're marked by the dotted lines. We are now down 2 months from the highs, much like we were in 2008. And as you can see, we did have a little bit of a holding pattern here, which would be the equivalent of a dead cat bounce, as Sam Archibald Harrington Hicks Crawford was telling us, that's what it looks like that's going on, and we have a big day coming in a week from today. I want to give everybody the opportunity to take the day off on Monday. We have President's Day, so we'll be closed that day, and then we'll start up again on Tuesday. So that's what we're watching right now. We've got the Dow up just about 100 points, the S&P up about 17, and NASDAQ up about 25. So things are still pretty strong. Whether these lows hold from yesterday or not, remains to be seen. But right now, they look like they have a pretty good chance of holding. That's the way it looks like from the cheap seats here in Tucson, Arizona. One other question that we had is about what would be a pullback in gold to look to be a buyer. To me, it would be somewhere around the $1,200 level. That would be the equivalent to that old high we had several months ago. So you want to watch it for ABCD type structure. That's the easiest way to look for it. Sometimes you get it, sometimes you don't. But at least a 382 retracement of this last move, which was $180. 38% of that is roughly $65. So you'd see that you'd be watching for, something of that nature. It's actually $50. Of some type, and that takes you right down to around 1,200 anyway. So you want to watch that 382 retracement. Of course, we'll be on the air to see what's going on, about that time, and you'd be able to spot it as we get closer. Silver's still lagging very badly. It couldn't even get any higher than the 786 retracement of the last move. So that's it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.